Hi traders, and welcome back to episode 27. So in this episode I'm just going to cover a few of the tools that I use in MetaTrader to help me just define my edge, define my market environment, and also give me precise points in price where I should be paying attention to. So these lines down my MetaTrader, if you just hold control and Y, they're just period separators. So right now each dotted line you can see is 1 year. So you can see 2014 to 15 we was ranging, 2015 to 16 we was ranging, 2016 into 17 we was trending bullish, 2017 into 18 we was trending bearish, 2018 into 19 we was trending bearish, and right now we're currently at the start of 2020. So when you go down into our weekly, it still shows you 1 year. So it's just showing you 1 year's worth of price action. When you go down into the daily, it shows you, when you go down into the daily, I think it shows you 1 month. So the daily is 1 month of price action. When you go down into the 4 hour, it should be 1 week. And the 1 hour will show you, 1 hour is one, I think it should be 1 day. Yeah, so the 1 hour should be 1 day. Yeah, so the 1 hour should be 1 day's worth of price action, and obviously 15 minutes is also showing you that 1 day. So what I wanted to introduce is the ADR high and also the Asian session indicator. So the ADR high is just a average daily range. So you can see euro dollar's average daily movement is 51 pips. Today you can see price move 54.8 pips. So when we go down into our 1 hour chart, or even here in our 4 hour chart, this is almost a perfect example of how I utilize it as part of my edge. So if we see from our swing low down up into our swing high, we can see the ADR low comes in right around our 61.8 and near our 66. So that for me is a lot of confidence for an entry, or a highly precise entry, because euro obviously started the day bearish, came right down, done its 51 pips, which is just past our 61, in between 61 and 66. So for me, that's created a high probability area. When we look at this 1 hour again, you can see, so we would have been looking for longs in and around this region here, which we, as we just know now, is our reversal area on our higher time frame, which is the 4 hour. We also, even if you waited for candle close, we also saw that perfect doji, which means indecision right here, and then you can see price pulled back. So the way that I trade doji candles as well is, when you do see a doji, price tends to pull back 50% of the doji candle before it takes off. So that's just a little trick of the trade there. But again, like I said, it just gives you a more of a clear area of where the day low could come in or the day's high could come in, depending on your bias. When we go into our 1 hour chart now, we can see we've got the Asian session. So coming in from the Asian session right here. So it kicks in around 2, so it kicks in around 12, which is traded IC market is 2 hours in front, I believe. Yeah, so 2 hours in front. So you can see the Asian session comes in here, and then you can see when we get into here now at, this is 11, so this would be 10:09. So this was 8 o'clock. 9. Yeah, so in here now, so I think it's an hour behind now. So in here, that's our Asian session. So what I tend to look for with the Asian session is, more often than not, where it goes at the beginning of the day tends to reverse. So you can see following the Asian session, euro tends to just pick up momentum. So when you look back at the Asian session here, down there the Asian session we was at the lows, euro session going into the European Open takes the lows, and we go up and take out the high. So that was that day's worth of trading. So I just use the Asia session as more of a understanding of When you're in the hour chart, price is more often going to manipulate the opposite way to the higher time frame direction. So you can see here, Asia session, it trades below it, but ends up going higher. So few occasions trades below it, goes higher. That occasion we didn't. Then when actual structure shifts, it trades below it, retests it, and trades higher. So I just use the Asia session in a confluence with my own understanding of the overall direction. So when I'm in a bullish market, I'm looking for price to take out the low of the Asia session range and then reverse. And when I'm in a bearish market, I'm looking for price to come back up and retest the Asia session low or take out the high of it. So I'm looking for price in a bearish market. I'm looking for price to either come back up here to take out the Asia session high and then see that crash down, or I'm looking for price to do what it did here, to just retest the low and then continue down. So when we're looking at the ADR high and low, like I said, on this occasion we would have been looking at 1.1275 for our potential long area, and that would have aligned nicely with our fib reversal area at 61/66. So 66 would have been the best time to enter, as it's a higher probability area. So when you go through, obviously each one, they're applied to all the charts, time indicators. So let's have a look at pound, or actually let's have a look at Aussie dollar. So like I said, when you're in a bullish market, you tend to see Aussie, because it is more Australian time. Aussie will work better with the Asian session more than obviously European assets. You see Aussie just creates that low, and that price volume gets thin, and then you see price push up. Of course, these things are just, like I said again, just things to use to align yourself with the momentum of the market and just high probability areas. You can see here Aussie usually does 37 pips. Today it done 61. So if we drop down into our 15-minute chart, we can have a look. So Aussie had strong bearish momentum from here, Asia session open to Asia session close. We saw a brief little pullback up and then a sell-off that took us below. So the reason why Aussie came back up is because we went so beyond the normal day for Aussie. Almost 37, would have been 74, would have been double. So you can see now Aussie looks like it wants a bit more downside. When we just scroll through, let's have a look at UJ, because UJ had a nice move as well. So when we look at UJ's characteristics, I like to look at things in trading views. MetaTrader sometimes, as just a, because it's your broker, sometimes price action is a little bit different. Things are a little bit clearer. So I'm just using the overall one here. So when we go to UJ here, actually let's keep it more just about price. So when we go to UJ here, we see the failure. Let's have a look at what ADR was looking like. So perfect, another example here for our shorts. So we see that sell-off, and what do? We are looking for pullbacks again. See that 61 to 66. That's a lovely target. So that's a lovely point of entry. You can see your ADR high is around here. So you're nicely looking for a pullback. That's where you'd be looking for shorts, because that should be the average daily high. It just gives you a confluence more to an area as to where you can potentially enter back the market. Gold's very good for Asia session, to be honest. You see with gold, you see a lot of the times trades below the Asia session and then reverses, because we are in a bullish market right now. So it's just taking liquidity to the other side of the market. Silver, say like here, this is a good example. We know we're looking for a pullback on silver. We pulled back down just past the 50%. So you would potentially be looking for longs now on silver, because we're at the ADR low. We don't expect price to move a lot further. You can see here CAD, it just helps you understand. You can see how CAD, we're in a range, but we've got our ADR high and low anyway, letting us indicate we're in a range, and the average high and low of that range. So you could trade the range right now on CAD, because with CAD usually the range will range for a while and then it will break, and you can see the way the ADR low and high is just, it's basically in a line with the actual range anyway. When price does break out of the ADR high, like for example here, that shows you the adverse conditions. Oil usually does 91 pips, it's done 294 today. So that shows you there has to be some sort of fundamentals in the market to make the market move like that. But what would you be looking at when we've broken the ADR high? For me, it just becomes support and resistance as well. That's how I personally utilize them. Euro yen. So you can see on the last trading day before markets closed up, there was a lot of movement. So on that Friday, there was a lot of movement. Normally does 71, done 121, broke straight down. So you can see that was often for the yens because of what was happening with Trump. So you can see GJ look right down, but what happens, gets to the ADR low and we start to see a bit of deceleration. So especially when you're day trading, it's a good tool. For me, I don't really like setups like this, but this is a perfect example as well. So if I'm looking to go long on pound Aussie, you guessed it, my only area where ideally the best area I'd like to go long is around here. That 91, 92, so 97, that's the ideal area where I'd like to go long, because that's the ADR low. That's where price essentially should run out. 138 pips is done 87, so it could just have a bit more downside to the ADR low before we go higher. When price is in the middle like this, I don't usually touch it. Pound New Zealand, same thing, I wouldn't touch it. Euro Aussie, you can see broke well above the ADR high, and then it becomes a support for price, because now that's not the high for today, so now price is just in oversold territory. But Euro New Zealand, you see price starts to respect it a bit more. But when we move back to our monthlies, I do like to look at the monthly, weekly period separators, because it does let you know what kind of market environment you're in. So when you're looking at, for example, pound, you can see what price was doing for that year, and it just gives you a broader horizon about what kind of market you're in. So you see bear market, strong bear market since 2017. So it just gives you a bit more of an overall view. Obviously, you can see these things anyway with the naked eye, but sometimes when it's just mapped out for you like this, it's just a bit more helpful for you to understand why price is reversing at certain lows. Because if you look at, say, UJ on this monthly right here, this is a key level on UJ. So you understand when you zoom in and zoom in and zoom in, you've got the understanding of why it is that price area is holding. Like for example, when you look at this resistance here, you can see these are multi-year, 1, 2, 3. This is 1, 2, 2-year solid support for UJ. So you can just get a better understanding of what's happening in the market. For example, like with gold, when gold broke out these highs here, it was only natural that we was going to see a rally right into this region here, because that was the previous support before price broke off. But it's just good to see how price is moving. So you can see from 2017 we bottomed out. Price has now started moving in a bullish market, and to be honest, it doesn't seem to be over. It doesn't seem to be over with gold, not yet anyway. If we can get above this area, I still think we'll see further upside on gold. And you can just see the way this whole year has just been bullish, because you need to have a higher time frame bias. You need to understand what the higher time frame is doing, so you can understand where your bias should be. So when you look at, for example, CAD, you can see we're starting to decelerate. Price is starting to slow down. Then you can have a more broader look at overall price, what price is doing. And you can see with CAD as well, this is a multi-year trend line. So it's showing you that bears are coming back in the market. That's just my personal opinion on why I like to use the period separators, because it just lets you understand what kind of market you're in, especially when you're trading volatile assets like the cross pairs. And for me, it's just a good tool. Like you can get a good gauge. Like for example, here on EJ, if we get back above these highs, when you look at it on a monthly chart, you understand we're still in a bearish market, as you can see. And if we get above these highs, then potentially we could be seeing a break retest and then a new trend coming in. So that's just how I use the obviously ADR high, Asian session. Asian session works best when you're in a trending market for me. Just knowing where the consolidation is going to be and you're waiting for price to trade below it or trade above it can be very helpful when you're keeping your eye out for market manipulation. So moving on to the next episode, I'm going to cover just overall psychology and trading psychology and just expectations you should have for your trading edge and your trading implementation. So I hope you enjoyed this episode and stay tuned for the next one.